morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. Don't forget that you can sign up on elliottwavestreet.com/membership to get the daily reports with charts, with videos, with commentary, with trading plans on Telegram, and a lot of tools like the Members Academy to learn how to use the wave counts. So let's start with the euro. This is a weekly chart. On the weekly chart, we are seeing the price on the euro doing a corrective wave. This is a long-term chart. And here we're planning to find the bottom of the market. Look at the size of the candles. Now we're seeing a smaller size of these candles, showing that liquidity is back in the market, and all this smart money is starting to get into the market. So on lower time frames, we're going to plan the entry, and the main plan is to have a buy trade at the best price possible to go back to the previous high. This is a medium-term plan, but of course, we're not going to find a trigger on the weekly chart, so let's go to the lower time frames. I'm going directly to the hourly chart. On the hourly chart, the entry plan is going to be pretty simple. The way to trigger the trade will be if, only if, we have price below this pivot. And we're talking about swing trade, right? So we need to see price below this area, completing the 5-wave sequence. And once we have this 5-wave sequence, I'm going to look for a green candle, just a green candle, to go long. That's it. My stop is going to be below the low, and this is going to be my entry. Because here, we're going to have accumulation. Let's talk a little bit about accumulation. When we have a strong move down, there is nothing there, like this one here. There is nothing, just a withdrawal of liquidity of the big guys. But when the market starts showing some demand, like this area on the euro, is showing some smart money, some institutional money coming into the market, and also some buyers that are now trapped. Imagine someone buying here, for example, or buying here, right? That's crazy. So they are trapped, and their stop loss is here below the low. So of course, that's something interesting for the big guys. But as professional traders, no matter if we are in the retail world or if we are in the institutional world, we are always going to sell at the market extremes or buy at the market extremes, right? Not the other way. So in the accumulation cycle, we are going to look for a leg down. And if we have some buyers, that could be the first entry if the wave count is telling that that's the end. Or if we have an extension like the one on the euro, we are going to look for another one. And once we have another reaction, it's going to be the buy trade. This is accumulation. Of course, if price goes down like this, it's not going to do accumulation. It's going to do another extension, and we will need to look for accumulation lower. So it's not all about the wave counts. The wave counts are important, extremely important, but we need to have wave counts plus setup. So let's say that here we have a huge red candle. Well, it's not ready yet. We will need to find another entry lower. But if we have the accumulation, that's where we are going to jump into the trade. So in order to find a good entry, we need to have the wave count, because it's going to tell us where we are likely to go. And then we need validation. We need a setup to confirm that the institutions are doing what we are expecting, what we are thinking. Look at the pound. I have an interesting setup on the pound today. I'm looking for a short trade. This is a simple setup. So I'm just looking for the setup right now. This is A, this is B. I'm looking for wave C. Once wave C moves above wave A, this will be wave A, B, and C, right? Look at this supply area. Really interesting if it goes there. That will be great, right? So if I have, well, after all this setup, a red candle closing below wave A, that's my sell, a market sell order, and the stop loss is going to be above this area. Once it reaches 1-to-1, I'm going to book partial profits, half of the trade, and then I'm going to leave it, the trade as it is with the original stop loss and everything to run and capture a wave 3. Simple, right? Simple trading plan. Let's have a look at the S&P. The S&P is really interesting because, look, I'm bullish on the S&P. So yesterday during the afternoon, I shared with my clients through Telegram. We have a Telegram channel. And look, this was the chart that I shared yesterday. So I was expecting these red bars. I draw them, right? This was the live market here. So the other ones are my drawings. And this was the plan, to trigger the S&P right there and to leave a protective stop loss just here, small stop loss. This was the expected, and this was the actual. Too deep, this was the original area. And I was expecting the price to bounce here and buy it here. So the question is, well, should we buy here? No, of course not. That is huge, the distance that we are having from the low. As traders, we need to trigger the trades closer to the bottom of the market. There was a nice entry overnight right here, but I was sleeping at that time. It was 3 a.m., right? So it doesn't have any sense to trigger there because I wasn't in front of the screen. But look, now that we have all these validations and we have a huge probability of the S&P breaking these highs, we just need a discount. And I'm going to be aggressive at this discount. So let's say that we start seeing, this will be the wave 1 and looking for wave 2, right? So let's say that we start seeing some red candles, red, 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 and eventually I see a green candle. What's the meaning of that green candle? What do you think is the meaning of that green candle? Demand. That's it. That simple is going to be my entry on the S&P. And that green candle can happen here or it can happen here. It doesn't matter. I'm going aggressive because any price during the retrace is going to be a discount of our already validated setup. So if we have the discount, I'm going long. That's it. When I see demand, that's important, because if we don't have any demand and the price starts doing something like this, I'm not going to buy it. Makes sense? I need to see demand. All right, let's have a look at oil. Another one that is interesting today. Look, this one, I shared this trade today in the morning with my clients in the Telegram channel in oil. So look at my entry and look at my stop. What I like to do is to target 1-to-1. At 1-to-1, once, and it doesn't matter, if I'm risking 20 points, the 1-to-1, of course, is going to be 20 points, right? Or 30 or whatever. So once the price reaches the same points as the stop, 1-to-1 risk-reward ratio, I'm taking half out of my trade. And I'm leaving the stop loss as it is. So this is already a safe trade. It doesn't matter what's going next, what is going to happen next, if I reach at least the distance that I have to the stop loss. And always I'm looking at the market extremes, with the smallest stop loss. So nothing to lose if we reach the 1-to-1. Let's see what happened after that. We have this strong move down on oil this morning. So this was the validation candle. Here was the stop, right? So around this area we have the 1-to-1. So I book my partial profits and I'm leaving my original stop loss here. Right? So if we are in wave 3, And this could be just an irregular expanded flat, that's fine, running flat. If it finished without hitting the high, and we start the wave 3, fantastic, because this is a risk-free trade already. But what if price starts or continues going higher and maybe takes out this high? I'm going to close my trade at break even. Let's say that we have another green candle. Let's say that we have another one and hits the high. If that's the case, I'm going to sell it at the next red candle here. No, that would be the strategy in that case. But for now, I'm going to keep my trade as it is. It's a risk-free trade. If it starts the wave 3 as expected, fantastic. If not, we will have a better price to get in again. But this was the supply area. Let's look to the left. Look, important area. Plus the entry, the validation for wave 2. Fantastic. And look, after the entry, all the price that we have to the downside. Right, so those are the entries that I'm looking every day, finding the best setup with a small risk, with the Elliott wave count that is extremely important in order to find the bias, and then just following the trend, managing the risk, and updating the analysis. That's it. All right, traders. So that's the plan for this week. If you want to access this fantastic membership, you need to visit us on ElliottWaveStreet.com. Let me show you. ElliottWaveStreet.com. Then hit the membership tab. Under the membership tab, you're going to find the different memberships, Forex, stocks, and full access. And also, we have some free resources like the weekly video, the volume profile course, which is fantastic. And you can start with the membership, the trial. You're going to get access to everything, plus the new Members Academy with educational content. It's a fantastic course that is growing because I'm adding lessons. So you will have quizzes, you will have the how to use the wave counts and strategies to manage the trade, to manage the risk. So I'll see you inside the membership. Please have a fantastic start of your week. Take care. Bye-bye.